All right, well, investors are closely watching more Fed speak today for any hints about the Fed's next move on rates and whether another hike is necessary. Verizon CEO Hans Vestberg told us yesterday at Yahoo Finance Invest the impact of higher rates, what they're doing to his business.
Normally, you would think about with all these interest rates going up, we would see a slowdown very quickly in the US. But we don't see it. And the reason is, of course, that not all that interest increase is going straight to consumers. It hits the ones that have variable interest rates, which corporation might have and things like that. So I see much more tougher in especially Europe.
We want to bring in Ellen Hazen, FL Putnam Investment Management Co Chief Market Strategist. Ellen, great to see you here. So let's break down exactly what we're seeing. We talked to a number of business leaders yesterday, the impact that their business specifically is seeing because of higher rates. But then also we talked to a number of strategists, economists yesterday, business leaders, just about what they see in terms of the forecast here going forward for Fed policy. I'm curious what you're seeing from a market perspective and how you're just adjusting your strategy as a result.
Well, thanks for having me. First of all, the market is pricing in that the Fed is going to start cutting rates mid next year. I think May is the current forecast. That may be too aggressive on the market's parts. As we're looking at this, the Fed has been pretty clear, and especially with more recent Fed speakers out in the last day or two, saying that they might be higher for longer. And as you know, that's going to have a dampening effect on equities. Equities have already had a really strong return this year, and I wouldn't be surprised to see equities be kind of muddle through for the rest of the year as we move forward. Why is that? Number one, although we're seeing an earnings rebound, with Q2 being the trough in earnings and Q3 being a little bit better, Q4 accelerating, we're also seeing GDP estimates clearly showing that the economy is going to slow next year. We saw a slower economy in the labor numbers that came out last Friday. So as we look forward, given that the market is over 18 times earnings, it's hard to expect a lot of market return from here. I think instead we're going to see churn for the next several months.
Where does that churn begin at? Where is some of the slippage or the outflow, do you believe, kind of initiated?
Well, one of the performance of those AI stocks, and particularly the so-called Magnificent Seven, and as we look at those, they had outperformed massively through most of the first half of the year. But in September, October, they've underperformed the overall market. So even though they remain very strong on a year-to-date basis, you're seeing some of the air come out of that. A lot of those are very long duration stocks. As rates have come up over the last several months, you have seen that reflected in the valuations compressing a little bit for those stocks. So we can see a churn away from some of those AI plays toward areas that have underperformed so far year to date, particularly some stable areas, steady-eddy, boring companies that have not participated as much as those AI stocks.
So, Ellen, when we talk about some of the other areas of opportunity within the market here, outside of AI, outside of some of the recent outperformance that we've seen, what are some of the names or some of the sectors that then you like at this point?
Well, we're looking at very steady, high cash flow, high return on invested capital compounders. So what does that mean? One example is a company like Paychex. They do payroll processing and other HR functions for small to medium-sized businesses, very sensitive to payrolls. And as we have seen, jobs have remained very strong all year. That's a company with amazing return on invested capital, over 40% return on invested capital. And you can get it for not too much more than 20 times earnings. So that's a stock that we really like. We think is going to do well outside of a recession and almost any market environment that's going to do well. Another really steady-eddy company, kind of boring, but again, good return on invested capital, is Republic Services, a waste management company, duopoly business for the most part, very steady. You get 1 or 2 points of volume, you get 2 to 4 points of price, grows through almost any market environment. And again, you can get that for just over 20 times earnings. And so some of these steady-eddy companies have just continued to churn along in the background and are not subject to that same multiple compression that you see from the long duration assets.
Is there any kind of common denominator in what you're hearing from CEOs of the steady-eddy companies, as you've defined them, that kind of gives you an inclination to be a little bit more either bullish about them or just what their prospects are in the industries that they operate?
Well, for the most part, they're keeping an eye on the overall economy and they're looking at rates, of course, but they're really focusing on the nuts and bolts of their business. So they want jobs to continue strong for sure. And they're looking at overall indicators, but they're not so focused on what the pundits are saying. Instead, they're looking at their overall business and how they can grow, how they can continue to provide both volume and pricing growth going forward. So I would say that they're focused on the nuts and bolts rather than looking at the overall economic picture.
Ellen, when it comes to the biggest driver of the markets from here going forward, obviously now that we're nearing the end of earnings season, is more of the focus now on earnings and the results that we've seen over the recent weeks versus the Fed, or how are you balancing those two critical factors?
Well, we've seen almost all of the S&P companies report to date. I think close to 90% have reported already. So for the most part, earnings are reported, they're done, they're in the bag, and there's not a lot more to look for except for those companies that have off-quarter earnings where their fiscal years or fiscal quarters end in October rather than in September. So we think the earnings for Q3 is behind us at this point. Not too many companies have given guidance for next year. So it's a bit of a quiet period. Of course, there are conferences and other public forums where companies are speaking, as you had yesterday. So we'll see what they have to say there. But at this point, from a company perspective, most of the news is actually going to be more relevant from the Fed and speakers that from the Fed that are talking, as you noted, this week and next week and going forward. The other thing we're watching is economists' forecasts for GDP, and those are still going up for next year. So we're seeing a slowing economy, but the economists were, for the most part, too bearish earlier in the year, so they're playing catch-up. We're watching that as well.
Yeah, but Ellen, sorry if I worded that incorrectly, but I was talking about just in terms of now that we're moving on from third quarter earnings season, have we seen the shift in sentiment from investors? Or a little bit more reassured, a little bit more optimistic, given the results that we got this past earnings season?
Well, surprises were decent. Surprises were, I think, 1% on sales and 7 or 8% on revenue. So those were decent, but those are smaller than they have been historically. The other thing that's a little bit worrisome, and I think points to a little bit of market fatigue, which drives our churn narrative, is that the market has been rewarding beaters less. And so that's telling you that the market is saying, yep, great, thank you, not quite enough for what we're looking for because the market's a little bit expensive at the moment.
Yeah, some data from FactSet coming into the start of this week. Earnings growth for Q3 2023 blended year over year for the S&P 500, 3.7% by the index since Q3 2022. So some interesting tidbits there that they've been tracking on that earnings front. Ellen Hazen, who is the FL Putnam Investment Management Company Chief Market Strategist and Portfolio Manager. Thanks so much for joining us this morning to kick off the show, Ellen. Appreciate it.
Thanks a lot.